Welcome to Core Finance, sponsored by Beaufort Securities. Live on Facebook at Core Finance TV, and finally for you youngsters out there, Twitter handle at Core Finance TV. I'm joined by Matt Brown. Morning to you, Matt, on a dull, miserable autumn Monday morning.
Autumn? Come on, it's middle of summer. Yeah, come on, let's brighten it up then.
Right, okay, well, let's go through a number of slides that the team has set up. Market movers, the headline, central banks own 20% of the national debt.
Yep, not really market moving this morning, but worth bearing in mind as we move into the reduction of QE potentially coming towards the back end of the year, certainly starting off with the Fed, with the rollover or rollout of their debt. 20% of national debt, so the banks own their own debt. So, who do you pay the interest to? But, I mean, that's a big problem. So if you're owning your own debt, you've got to find a buyer now for that debt. So that's going to be interesting over the next coming months and certainly into 2018. How is that going to affect the market? As we know, the bond market is usually a precursor or a good idea, litmus test for where the equity markets are. If we see all this national debt coming into the market, how's that going to impact certainly the markets and equity markets? So keep an eye on that. That story will run over the coming months.
Okay, let's move on to FTSE. It's a FTSE 250 today. One to watch. Rathbones Look Forward. What's the headline there?
I picked this one out. This is their tagline, Look Forward. Call to action, whatever that means. But anyway, Rathbones are looking forward. They're looking forward at the market, the asset management market, being a tough market with the likes of BlackRock and Vantage, all these ETF computer-led programs. Rathbones is an old-school fund manager. They have merged with, or planning a merger with, Smith & Williamson, tying that up together. Now, the reason I picked this out, I pointed out last week, in fact, last Monday, Standard Life in Aberdeen, that was the first day of trading for the new company, how fund managers are going to need to merge in this market to save costs. So we're already seeing that happen now. Rathbones and Smith and Williamson, stocks trading up small on the back of it, but it's more out of necessity than opportunity.
Understood. Let's talk about AIM one to watch. Frontier, I assume this was an oil stock?
No, Frontier Developments, I picked this one out. The stock's trading up 12%. This is a online game company, and they've developed or got a contract to develop for a couple of dinosaurs like yourself and I, Jurassic World. This is expected to come out, a game out in 2018. This will be their third biggest game. Now, the stock started trading around £2 at the beginning of the year, is currently up at £8.25. Wow. So the market likes it. It's not been one on my radar, but I've picked it out this morning. Viewers, take a look at that if you want to be in this space.
Understood. Let's move on to the currencies. The Great British Pound, Euro against Great British Pound, cross 91.22, and cable, Great British Pound against the US dollar, 128.66.
Yeah, not too much movement here, and this is the case for the rest of the FX market after we saw moves last week, certainly with the dollar. Worth noting, though, Russell Lynch, who writes for the Evening Standard, had an article.
And a friend of Core.
Indeed. Had an article on Friday talking about tin hat time for sterling. Now, this was on the back of the Bank of New York, BONY, which is a large custodian bank, one of the largest in the world, if not the largest, saying they've seen inflows over the summer come into sterling, really on the back of some hawkish comments that they saw coming out of the Bank of England. However, over recent weeks, they've seen a lot of outflows. This is the smart money, the long money. The asset managers are moving out sterling, and on the back of that, as he says, could be tin hat time for the sterling.
Seller for choice. Okay, let's move on to the broker upgrades. Today we've got HSBC, the company, British Land Company, going from a hold, or going to a hold from a buy. In terms of the target, 678. The previous target was 738. Couple of headlines.
Bearish on this, and the stock's trading down about 1.5% this morning. HSBC just saying, look, British Land, they've had a fairly good run of recent years. Now time to take a bit of profit, moving their price target down. Really, that indicates a sell in that space for me.
Okay, the core number, 10.2 billion.
10.2 billion, the number we've picked out over the weekend. This is the amount of exports by the UK in the food and drink sector for the past 6 months. The first half of this year, 10.2 billion. It has increased. This is on the back of a weaker sterling. But a couple of areas that are worth noting. There's a lot of whiskey being exported. That's our largest exporter when it comes to food and drink. Salmon sales up 22%. They're exporting to Asia. And there's been a 77% increase in beer imports in South Korea. That's exports from the UK.
Yep.
The South Koreans are getting the beers in. Maybe they're a bit worried about what's going on north of the border and need a little
If in doubt,
bit
have
of
an
release.
extra
Yes.
lager and lime. Right, Matt, thank you for that. My final comments, Metro, there's rumours that DMGT are looking to sell the Metro. I'm not sure anybody reads anything other than Metro. And finally, a number of videos we did last week, people bearish on the markets, Watch out for a Clem Chambers video that's going to be posted today, and he's gone bearish as well. What do the clever people know? Thank you very much.